The time between your mortgage application and your closing day is the most critical period for your financial behavior, and one wrong move can kill the deal. The absolute number one rule is to never open a new line of credit or buy a car, because a new monthly payment can ruin your debt-to-income ratio instantly. You should also avoid making any large or unusual cash deposits into your bank accounts that cannot be clearly sourced and documented for the underwriter. Changing jobs or moving from a salary to a commission-based role during the loan process can also create a major red flag that might lead to a denial. It is vital that you continue to pay every single bill exactly on time, because even a minor drop in your credit score can change your interest rate. Wait until after you have the keys in your hand and the loan is officially closed before you go out and buy new furniture or appliances for your house. Lenders perform a final credit refresh just days before closing, so your financial profile needs to stay exactly the same as when you first applied. Visit changemyrates.com today to get our full checklist of home buying do's and don'ts, so you can reach your closing day with total confidence.